Hello, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities, and I'm delighted to host this Red Cloud webinar on gold exploration and development today. With the gold price up over $2,600 an ounce, this is an exciting time to invest in this space. My special guests today are Ken MacLeod, President and CEO, and John Darch, Chairman of Sonoro Gold Corporation.
Hello, Tim. Thanks for the invitation and welcome to the webinar.
Absolutely. During today's webinar, Ken and John will provide an overview of the company's achievements and their outlook for the company's plans, and then we will take questions. You can type your questions into the chat box at any time, and then we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Sonoro Gold webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined in the Sonoro Gold corporate presentation, and this can be found on the company's website, sonorogold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Sonoro. And now I'm delighted to introduce Ken MacLeod and John Darch, who will present the story. For those not familiar with the story, Sonoro Gold is focused on gold exploration and development in Mexico. The company is advancing its Cerro Caliche heap leach gold project, where it has a resource and a PEA. I'd now like to turn it over to Ken and John to update you on Sonoro Gold.
Thank you very much, Tim. I'll start off with introducing the two of us so that you get a feel for our background. So I'll start off with John giving us an overview of his extensive experience in the resource sector. John?
Thank you, Ken. My background is in finance, basically in the UK with a bank, recruited by the Royal Bank in Canada, commercial lending, and then I started a small group of companies in the 80s, and all in the natural resources. The most prominent would have been a company called Asia Pacific Resources, which established about 1 billion tons of high-grade potash in Thailand, a successful development, which was then sold to a Thai company, another company called Crew Development. But we started off by acquiring a controlling interest in a South African company called Metarex. We privatized the Chibougamau copper mine, merged with a company in Norway, opened up the first gold mine in Greenland, and had projects around the world. So my involvement in the companies have always been on the structure side, the concept, building a business plan, and securing the financing. Okay.
Thank you, John. My own background, 45 years of resource experience, and starting off in the oil and gas sector in the 1980s in the United States, and also in the South China Sea of Palawan Island, the Philippines. In the 90s, I spent much of that decade in the what was originally Zaire, which became the Democratic Republic of Congo. I was developing a copper cobalt project there. In the 2000s, much of it was spent on developing geothermal energy, first of all in Canada and then in the United States. And then the company got taken over in 2009. And from there, I went into the Philippines and developed a renewable energy company, which was sold to a subsidiary of a large conglomerate in the Philippines in 2014. And since then, I've been the president and CEO of Sonoro Gold. So if we can advance the slides, Catherine, please. Forward-looking statements, obviously, we have to talk about those, but they're a little extensive here and it'll take time. So I think we'll move on from here. So in addition to John and my own experience in the resource sector, we have two key persons living in Hermosillo, Mexico, where our operations office is. The first one is Jorge Diaz. Jorge and his colleague Mel Herdrick, the fourth person down there, were the original founders of this company, Sonoro. They've been with the company since it went public in 2011. And Jorge has extensive experience in building mines in Mexico. And some of the notable mines that he's been involved in the design, construction, and operation of would be Mulatos, La Colorada, El Castillo, and many, many others. And so he's knowledgeable. He's got his own private mine as well in Quiriego, which is near Hermosillo. And so his hands-on experience will serve us in good state when we start to construct and operate our own mine at Cerro Caliche. His colleague, Mel Herdrick, is a geologist educated in the United States at the Idaho School of Mines, worked with Phelps Dodge in the US, and he became head of exploration Mexico for Phelps Dodge for 13 years. And he was one of the founders, along with Jorge, of Pediment Gold, which was a very successful operation for them and led to the takeover of Pediment Gold in 2011 by Argonaut Gold. And so if you look at the history of Sonora, or Sonoro, it's running along a very similar track to what Pediment Gold did back in the 2005, 2011 era, and to build up a suite of projects, drill them, develop a resource, and for us right now, the goal is to get the project into production because it has tremendous value as we continue with the drilling program. So next slide, please. The company has 206 million shares issued and outstanding, of which the insiders own 24%. When you add our families, we're probably up around 27, 28%. Our average share price is significantly higher than what the price of the stock is today. We're trading currently at around 10 cents, but the insiders' average share price is certainly in excess of 15 cents per share. And so we believe very, very strongly that when we advance the project further, that we're going to be able to, not just for the insiders, but for everybody to get a decent return on our investment. The stock has been as high as 39 cents 3 years ago and hit a low of 4 cents. But currently it's been trading very extensively in the 8 to 11 cent range. And then as we go forward, next slide, please. I think the most important element for us right now is to get an understanding of what is happening politically in Mexico. We have gone through a 6-year period under the prior administration of López Obrador, and where essentially the mining companies like us were shut out of the decision-making process. This is now all changed. As of October the 1st, President Sheinbaum has been taking a very pragmatic approach to dealing with the investments in Mexico as a whole, and specifically in the mining sector. So we now know that SEMARNAT, the environmental agency, has been tasked with reviewing projects and advancing projects through to production. Many, many reasons for this, of course. One, of course, is rule of law. That's one. We went through the environmental review process 2 years ago and fully expected to have the environmental permit to build the mine 2 years ago, but everything went into a deep freeze at that time. And we're not the only one. We have not been singled out. There are many, many companies that are in the same position. Small companies, medium-sized companies, and large companies. But President Sheinbaum, with her new pragmatic approach, she's now encouraging dialogue between the government and the mining companies. And she's established committees that comprise of senior members of her team, her administrative team in Mexico City, along with the folks that are representing us miners in Mexico. And the dialogue is ongoing, and the dialogue is positive. Then, of course, she's had a meeting recently with the U.S.-Mexico Forum. Over 200 CEOs were invited to the palace, and she reiterated the fact that your investments are safe in Mexico, and we want more foreign investment in Mexico. And because of the status of the economy of Mexico right now, the mining companies can be the catalyst for stimulating the economy, which is desperately in need of some stimulation at this point in time. So we're looking forward to dealing with the Sheinbaum government, and we're looking forward to getting a resolution. And we believe that over the coming months, that we will see projects being approved for going into production in Mexico and in the open pit sector as well. So moving forward, Location-wise, Sonora State is the prime jurisdiction in all of Mexico for building a gold mine. It's the #1 producer for gold in Mexico. Over 30% of the gold produced in Mexico is mined in Sonora State. It's the mining industry represents 25% of the GDP of Sonora State. So when you look at the fact that no new open pit mining projects have been built in Sonora State over the past 6 years, essentially, and if you look at the fact that the 70% of the mines in Sonora State are open pit, then you will start to get an understanding of the fact that the economy of Sonora is crying out for the approval of these mines that have been held up for some time. And like I mentioned, we've been held up for over 2 years. So in the meantime, we're sitting there in a very, very prolific mining area where we sitting at near the town of Magdalena de Quino, and surrounding us are producing mines and soon to be producing. Then soon to be, it would be Agnico Eagle's Santa Gertrudis project, which they purchased in 2017 and have been drilling ever since. To our southeast on the same structure is a Mercedes mine operating at 350 meters below surface. And the geology is very, very similar to ours, and because it is the same structure. And to our west and adjacent to us is the Cerro Prieto mine, open pit heap leach mine. So it's a disturbed area. It's our deposit is entirely oxide as far as we drilled to date. And we have drilled down to 250 meters. And so from an environmental perspective, it's a very, very benign process for us to mine the open pit and the leaching afterwards. So going forward, we produced a resource estimation by SRK in early 2023, and that was followed up in later part in October of 2023 by Micon International and Denim Engineering, which produced the mine plan and the process for the mine plan. And they produced a PEA, which showed at a price of $1,800 gold, net present value pre-tax of $71 million US. After tax, it was over $117 million. And when the price of gold increased to $2,000, obviously there was quite a substantial increase in the net present value as well. And it went up to $117 million of a pre-tax net present value, 77 million after tax. Now, keep in mind that we're going to be plowing the profits from this mine back into expanding the resource substantially over the next few years. So it's more appropriate to take the pre-tax valuations at this point in time. Now, where we sit down there with the SRK resource estimation, they put together a report, which showed that within the pit shells, there's 440,000 ounces of gold at an average grade of 0.45 for the gold, 0.45 grams for gold, and 0.46 grams for the gold equivalent. So as you can see, it's essentially 97% gold with a little bit of silver added to it. The recovery on the gold on the basis of 80% half-inch minus for the crush gives us 74% in the lab, and we've reduced that to 72% in the field because of inefficiencies in the field. So based upon that 440,000 ounces within the pit shells, we worked out a mine plan which will deliver 11,000 tons per day throughput over a 9-year life of mine, averaging production of 33,000 ounces a year of gold. Now, that's the very, very beginning of our operation. That is not the final amount of gold that we're going to produce in this Cerro Caliche mine. The bottom line is we had intended from day one to produce enough of a resource that would enable us then to go into production and use the cash flow with no dilution to the shareholders, use the cash flow to plow into the additional drilling program that enables us to then realize upon the full value of the project. And we estimate at this point in time that less than 30% of the known mineralized zones in the property have been drilled and assayed. That leaves us a potential 70% of known mineralized zones that we have assessed at surface with surface outcroppings. And we fully believe that these zones can enable us to expand the resource up to as much as 2 million ounces. So that is a forecast that we've been operating under, and that's the reason why we have decided to go into production at this early stage and then use the cash flow to expand to its full potential. So going forward to the slide, yeah, thank you. As you can see here, all the charts are very, very similar. They give you the same picture. So if you look at the top left, which would be the net present value as a function of CapEx, at $1,800 gold, I believe it's about 5 times, say, CapEx. It would be the net present value at 2,000. It goes up to, I believe it's as much as, I can't see it very clearly on the screen here, but it's about 14 or 15 times the CapEx. And that is as far as we can venture at this point in time, because we have not delivered a PEA which incorporates the realistic prices for gold nowadays, which is a $2,700 gold. But as you can see, the costs remain the same. As the price of gold goes up, the valuation of the project goes up in a straight line. So we're very, very happy with the outcome of the current gold price. Next slide, please. So here's what I mentioned to you about the 30% of the known mineralized zones in the property have been drilled and assayed to date. There's a grand total of 25 parallel zones that we have that are trending towards the northwest, and this entire district typically trends towards the northwest. And these zones that we drilled to date are approximately 8. And within these zones, the majority of the resource is in the Japonesa zone, which is right in the center of the map there. And off to the west is the Colorado, Cabeza Blanca, and Guadalupe vein structure. The average grade, like I mentioned before, is 0.45 grams of gold throughout the project. However, the western sector there, where you see Colorado and Guadalupe, the grade is almost twice as much. And so in our mine plan, the first 2 to almost 3 years of production would be focused on that western sector. Obviously, there's a huge amount of room for expansion within the known mineralized zones. The main pit shells would be those 2 areas, the Japonesa zone and its surroundings, and the Colorado Guadalupe vein structure. So there'll be separate pit shells initially. But as you can also see up to the north there at Rincon, there's a potential for us to have another substantial pit shell up in the northern area as well. And to the north and to the northeast of the Rincon zone, there's an area which is underlain with rhyolite, which we feel very, very strongly is quite mineralized. And all the surface mapping and sampling we've done shows that the grades are elevated as far as gold is concerned and elevated as far as silver is concerned. So we are really, really encouraged by the results we generated there, and we will continue to drill, especially in those northern zones as well. So going forward, we believe that pretty well the area surrounding these pit shells will advance into significantly larger pit shells over a matter of time. But we also feel that there's potential for going to depth with some of these mineralized zones. This is the Colorado zone, which is in the southwestern part of the concession. And the elevated grades you're seeing at Colorado, the bottom right-hand corner, I believe it's 20, I have to look at my own chart here. It's in the order of about 27 and a half meters of 5.5 grams. And that's starting almost at surface. And including a high of 46 grams at 50 meters below surface. Now, these are very, very substantial grades that our friends at the Mercedes mine would encounter at 350 meters below surface. And so we were enthused, we got very enthused about this and continued with a drilling program going up the slope to the northern end, the top end of the Colorado zone there. And if you were to look at this as layers right now, the front layer that you're looking at is an extension of what we call the Guadalupe vein structure. And behind is the extension of the Cerro Caliche, that would be the Cabeza Blanca vein structure. So these two layers are side by side, and are separated in this area by about 100, 150 meters. Now we're getting these high-grade structures all the way up to the north end of the Colorado zone, and they continue to the north. If you were to look over the top of the ridge and go to the north, which would, and on the next slide. And here it is that you've got on the left side, you have the Guadalupe vein structure. On the right, you have the Cabeza Blanca vein structure. And as you can see as well, I mentioned to you the potential for going to depth. And these vein structures are all open to depth. And they're open to the north and open to the south along the extensions. So there's a lot of drilling that still can be done in order to keep enhancing these known vein structures and not having to go into the brand new vein structures. So right now, if you look at the Guadalupe vein structure, there's over 1 kilometer of high-grade high-grade vein structure going from the north end of the Guadalupe zone to the south end of the Colorado zone. And it's similar on the Cabeza Blanca side as well, except it's a little longer, 1.2 kilometers. So we have at least almost 3 years of production sitting there in the known area that you're currently looking at, and obviously we want to go to depth as well, because the mineralization came from the depth. And so it behooves us, of course, to continue the drilling program to go to further depth as well. And we will do that. And the next slide, please. I'll go through these very quickly. This is a cross-section of some of the other vein structures, and I think we are showing about 5 vein structures here, trending northwest. So you got the higher grade in the middle of the vein structure, surrounded by disseminated gold, and it's all mineable. So there's very little of this that would not be economic, because the cutoff grade that was used was 0.2 grams by SRK. An interesting thing as well was in spite of the high grades that I showed you in the earlier slide, if we can go back to the Colorado zone for a second. One more, please. If you go back to that and you're seeing as much as 5.5 grams and over 27 meters, 46 grams of an intercept, we didn't get the benefit of those in the resource estimation because SRK had capped everything at 3 grams. So there's potential for us, of course, to keep on drilling in that area, or just go straight into production and take advantage of these higher grades. And so having a conservative overview by SRK is a blessing in disguise, because we know it's extremely conservative. So going forward, we'll go forward again and again. Next slide. Once again, I'm just including this slide here to show how easy it is to mine. Just start at surface, and you have the mineralized zone essentially at or within a few meters of surface. Next slide, please. This here shows you the plan we have for the next phase of drilling. And this could commence at the time when we're actually constructing the mine as well, because there's about 9,000 meters of drilling that's shown on here. And if you look at the area where the western area there, where Colorado and Guadalupe and Buena Suerte are, these are all higher grade zones that we feel very strongly will add significantly to the resource. And that's based upon the known distance down of about 60 or 70 meters of true depth from the surface. That does not include the potential for going to depth. It does not include the potential for an underground type deposit, should we go deeper than what we're showing here today. And then, of course, up to the north there, the Rincon zone, there's over a 1.2, 1.5 kilometers of strike length on that Rincon zone, but we have not included that in the resource yet because the drill spacing was not tight enough for SRK to show it as a resource, but they're showing it as potential. So next slide, please. Excuse me. This one here is probably my favorite slide of the whole deck here. As they work on the premise of the gold star on the top left of the screen, that gold star represents the day in which we get the approval from SEMRNAT to build the mine. If that were today, for example, and you go to the bottom right-hand corner of the screen, you see the next gold star, which is the day we pour the first doré bar. And we're estimating at this point in time, on a conservative basis, we can build this mine in 12 months and pour that first doré bar in 12 months from the date we receive the approval from SEMRNAT. And I'm not speaking out of turn here, because our team under Jorge Diaz, our mining engineer, has done this in record time of 5 months before. So I believe that if we were to achieve, and let's go into realistic dates now, if we were to receive the approval in Q1 of 2025 to build this mine, we estimate that we would be pouring the first doré bar Q1 of 2026. Next slide, please. And John, would you like to summarize, please?
Certainly. Thank you, Ken. This slide, I think, is very important because it does show you why Sonoro Gold is distinctive in the junior gold mining sector. And I like to say we're basically almost unique. And because we have the 5 essential components to be a successful company. The share structure Ken went through before, and I'm not sure if he mentioned, but and if our shareholders, we have approximately 40% or more in Germany and Switzerland, European. Very sound shareholders. They've been with us a long time, and they provide a lot of stability into the company, and they've always joined us in our non-brokered financings. But to get to why we are distinctive and why I think we're somewhat unique is that if you look at it, we have these 5 essential components that all successful companies need, not just in the mining sector. And unfortunately, many junior companies don't have them all. No fault of theirs, but it's just a fact. They just don't. And let's just look at the team. Ken went through the team here. We have 4 insiders who are part of the executive team here. And the good part is they're all successful. They've been in the business for some 45, 50 years, worked independently, but they're complementary in their skills. And that's important. Geology, mining engineer, financing, and marketing. And they've come together for this one company. And that also is important. This is one company. It's not just, if you don't like this one, we'll give you a different one. And they're commercially minded too. So they're successful, taking projects from discovery through to development, production, and sometimes to sale. Now, the strength of that management and the confidence is reflected in the ownership, which, as we mentioned, insiders have some 24% of the company. That's very important. But in addition to that, it's worth mentioning, the insiders have also loaned the company almost $4 million. Now, that loan is unsecured. There's no repayment terms. And as declared in the chairman's letter, it's our intention to get repaid from project financing or production. Now, to give a comment as to why these loans exist. These loans exist as a result of our maintaining property payments. And we had planned for them in our budget. Now, in our budget and business plan, when we started to make the commitment to go to production, we had project financing lined up. And the project financing would allow for the payment of the property payments as they fell due to come from construction financing or production. Now, when we did not get the mining license from the Mexican government, of course, the property payments have to continue, just as a mortgage on your home would have to continue, make the payments. So rather than go to the shareholders, rather than have a massive dilution, the insiders have elected to maintain all the property payments and provide additional funding to the company without any special conversion rights. There's no conversion rights associated with it. And further, just in case there's a concern, we have no intention of rolling back the company's shares. So in here we have the team, the project Ken went through, and he spoke very much about the project being only 30% of the known mineralized area. So that means to say that all the economics is based upon a fraction of the property. So if it's believed that it could be the other 70% mineralized will produce similar or more gold, then the economics get even better. Now, the company I mentioned is one where the insiders have a good position, 24, 25%, loans to the company, a shareholder base in Europe, and we're pleased to say that the shareholder base is expanding now in Sweden and also in the USA. That's very comforting for us. The rest of the business plan, we, being commercially minded and business people, have worked solidly with the business plan from day one. And that was the business plan that dictated when we stopped drilling. And it's very important to understand the resource did not dictate the business plan. It was the business plan that dictated when we stopped drilling. So please understand that just because we're going to production, it does not mean that's all that we have. It's a part of a plan, and we elected, rather than go for the high grade, it was like playing roulette. Let's make sure that we develop a very profitable open pit mine. And then from that mine, we can expand the resource, and then we can look at the potential of the underground. Now, the last part, of course, is financing. Nothing ever works without financing. That's one of the 5 essential components. We can show and point to a history of Ken and myself raising $300 to $400 million for various projects. So when we look at this particular project, which has a capital cost of about $15.5 million, say perhaps with inflation, etc., you could take it to $20 billion. That's US. We are not concerned about that at all. We have indications of financing, and they can come from various sources. So I think at this stage, I'll stop. That's my summary of the company. Thank you. Tim, over to you, I think.
All right. Thank you, Ken and John, for a very informative presentation. We will now start the Q&A portion of this webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a few questions, specifically on government relations. When was the last contact, I guess, you had with the environmental agency in Mexico?
Try this week.
Okay.
Oh yes, this is a sea change that has occurred in our dealings with the government and with the environmental agency. Up until President Sheinbaum took over on October the 1st, the environmental agency was essentially prohibited from dealing with us and prohibited from granting us the approval. Now that's all changed. We're in dialogue, we're talking to them, and so we believe that they're sincere in their desire to review the projects and come to a logical conclusion. So it's ongoing now, and we're waiting for a resolution of our long-awaited environmental permit, which is we've been waiting for 2 years, as John mentioned.
And a follow-up to that, to your knowledge, and obviously, you know, there's some optimism here about the new government, but to your knowledge, has the environmental agency granted any new license for a mine since the new president took office?
Not for open pit mines, to our knowledge. There have been extensions to existing mines that have taken place, but when it comes to new open pit mines, the answer is no. There's none.
Okay. And looking forward here, obviously, if you get the permits, what might the financing package for Cerro Caliche look like?
It will be probably a combination of debt and equity, or we are looking quite seriously at a gold loan. It all comes down to the terms. We're not enthusiastic about the royalty, so that's not on the table at this moment, but we have various opportunities. So it'll be potentially a combination of project financing, maybe some gold loans, and the portion of equity. We are expecting that the attractiveness of the project itself, in terms of the economics, of which we're well aware, Tim, means that we're going to have some really good, a good relationship and a good arrangement being made. But I can't go into any further than that at this stage.
I think back in the day when gold was trading at $1,800 an ounce and our share price was low, we felt there was very little desire on our part to go into an equity financing for the project. But now with gold at $2,700 plus or minus, the idea of doing an equity financing is a lot better, because we believe that as soon as we get the environmental impact statement approval and we start to build the mine, that the share price will reflect the new valuation on the company, and the shareholders will start to look at us from the point of view, what is your future earnings going to be? And so I think we'll be seeing a better share price. So there will be a potential for having an equity financing with a minimum amount of dilution on that basis. But also the financial institutions we've been dealing with are showing much greater enthusiasm with gold now at $2,700. They're showing greater enthusiasm for loaning the funds. So we will try to go for the maximum amount of debt to build the mine.
And if I may, Tim, just add a little bit here because it's important in terms of the share price. Now, obviously, looking at the share performance from the day the new president was sworn in to Mexico, our share price rose from about 5 cents from the 1st of October, and it moved all the way up to 11 cents, and is currently today, I think, at 10 cents. So it didn't go up in a straight line. It went up slowly and it built on good volumes. I think we've probably traded some 30 million shares. So it's not a spike. There's not been an outrageous promotion. It's been a reflection from our shareholders base that once it was apparent that it's going to go ahead, people started to come into the company, started to buy more shares. And so I don't think it's unreasonable to think that if it had that impact with the new president and a portion of our shareholders decided to come in and additional shareholders, once the license is granted and the full impact is made available, we're quite comfortable that many of our shareholders who we respect and understand why they want to sit on the sidelines are there ready and willing to come forward. We have I think a database of almost 9,000 shares, so we're well followed.
Great. And we do have a question that says, how is the mine building so low? I'm going to assume this is about the initial capex. We do have some juniors out there with projects that have $1 billion initial capex. Depends on the project and the nature of that project. But what makes this project have a more manageable initial capex?
Well, absolutely, that's the billion-dollar question, if I might use that pun. The bottom line is that we're looking at an open pit mine here. This is not a labor-intensive or a building-intensive construction. And we are looking at essentially clearing the pit shell areas, stripping them to enable us to start mining very quickly. But the strip at that point is very, very low. We have currently a 2-to-1 strip ratio, and in some areas the mineralization is starting at surface. So I don't see that as an issue. We harden the roads to accommodate the bigger trucks. The roads are already in place, and so that's not an issue at all. So we harden them for the big trucks, and then we build the foundation for the crusher. Yeah, nothing magic about that either. And then, of course, we build the leach pad. And the leach pad is being built in an area that's relatively flat, doesn't require a lot of earth moving, and just smooth it out, put a liner in there, and away you go, and you can start loading the leach pad. Then from there, it goes into what's called an ADR plant, which produces a doré. So there's no real physical structures of any size that's being built here. And so the capital costs were originally estimated at $31 million US. But what we did was because the markets were poor back in the day when we produced that PEA, we figured, let us put as much of the initial capital costs into operating capital or sustaining capital as we can. So we moved instead of purchasing all the mining equipment ourselves, we decided that we would subcontract the mining aspect of it. And there's a lot of contractors in Sonora State and a lot of mines that have been employing that technique, especially in the first few years. And we have a really good quotation from our selected mining contractor. So that removes a significant amount of capital off the initial cost. The other one is the crusher. We've been dealing with 3 crusher distributors in Mexico, and each one of them are quite satisfied, quite happy to provide a lease to purchase on the crusher. So that knocks about $8 or $9 million of the initial capital cost goes into operating capital. The leach pad, there's no point building a 9-year life of mine leach pad up front when you can build it for the first 3 years and then pay for the extension out of cash flow. So all of these, when you start to add all of these issues up, we've been able to cut the capital cost down from $31 million down to $15.5 million. Now, that was over a year ago, in October, and these were costs that were relevant as of August, September of 2023. So you can add, 10% or more because of inflation, and we're still under $20 million of total capital cost. And so I believe that we can, for $20 million, we have enough to continue with the drilling program as well. And like I said, within a year after starting the construction, we've been actually generating cash flow.
If I may add another valuable point here, Tim, because you raised a very important part, which was that a lot of the juniors are faced with capital costs of, say, $500 million. It's the scale of the operation, and I admire them for doing that. I've tried those things before. And I think what makes us stand out and almost unique, that those 5 essential components should have led to the conclusion that we can do it ourselves. That is what distinguishes us, that we have the capability to take this thing right through to production. We are not reliant on being taken over. And that's where many juniors, the magnitude of their project, they require such capital, they require expertise, and therefore they look for somebody to buy them and take them over. And the construction time runs into years with all the permitting and the timing, etc. So it's a long project. So we show you that once we get the license, within a year we can be in production, and we can do it ourselves. Now, that does not mean to say, and it has been raised before, that we are just digging our heels and saying, no matter what, we're going to do it ourselves. We're always open to commercial dealings. If it's felt to be in the best interest of the shareholders for a takeover, say, that would be considered. But investors should know the team in Sonoro, the structure of it, the commitment of the management in terms of dollars, the expertise and their history, is that this is a project that can be done by ourselves.
And I think along the same line as well, without belaboring the point, the current valuation of the 440,000 ounces within the pit shells works out to about $28 per ounce. Well, it's not going to take a lot of work on our part to increase that value once we get the environmental permit, because when you compare that to what Agnico Eagle paid for Grade Resources back in 2011, and it was $175 to $200 an ounce that was paid. That was back in the days when gold was at $700 or thereabouts. Here we are sitting at gold at $2,700, and I believe that we can add a significant amount of value by taking this project through to production ourselves. We're not going to sit at $28 for very much longer, in my opinion.
All right, great. And I guess a follow-up question to that, obviously, one question always is what is ultimately the plan at the end of the day? Is it to be acquired by a producer, or to build the company yourself into a producer and potentially add operations further?
Well, we have the ability to take this project through all the way to production and expansion, and create a small to mid-tier sized producer in Mexico. There's no doubt about that. We can do it. Now, we're not blind to the fact that there's people out there who have been kicking the tires for the past few years and are interested in the project and interested in our potential. So we will certainly entertain any notion of a potential takeover. We have turned down potential joint venture partners simply because it's too early stage for that at this point, because we can do it. Like I said, we can do it ourselves. So the ultimate goal is to add the value and be able to stand in front of the shareholders and say, we have achieved as much value per ounce in the ground as we can possibly achieve on our own. If somebody wants to take over at that point, that's a different story. We'll entertain it.
But there's also the alternative, Tim, which should be understood is I mentioned a company called Crew, which I developed. That was on the principle of getting cash flow, such as Sonoro. And we all know that cash is king in the junior mining sector. So there's a potential possibility, and it's not just to sell the company, that's for sure, which is that we could look from the cash flow, we could pay dividends, we could spin off San Marcial, which is our other company, and fund that too. And we could look then at, that would be as a subsidiary with shares going to our investors. We could also look at other projects as well, because once we have cash, the whole dynamics of Sonoro changes. So it should not be that this is going to be taken to the stage where it's going to be taken over. It could well be this develops into another version of Crew development, where it ended up with operations around the world, all driven initially by cash. Cash, and if you look at the people we have down there, with Mel Herdrick and then Jorge Diaz, etc., other opportunities come along. So that's another route to go. So people talk in terms of, well, selling to a major company. That's just one potential, but there's certainly lots of others that we could follow.
And we did have one question. You had talked a bit about that there's still plenty of exploration potential. Do you plan to do any drilling in 2025?
Yes, we do. And the reason that we have not raised capital for drilling over the past year is simply because the share price was too low and it would involve too much dilution. But as soon as we see the share price appreciating, and obviously I think the catalyst for that could be the approval of the environmental impact statement. At that point, we should be looking at raising capital for drilling purposes, along with the project finance as well, the construction finance. And I believe there's a tremendous amount of support for that two-tier approach of drilling and project finance simultaneously.
Great. Well, I believe that's all the questions we have today. I would like to thank Ken MacLeod and John Darch for presenting the Sonoro Gold story today. And thank you everyone on the line for tuning in. Red Cloud's webinar series will continue Thursday afternoon with Exelon Resources presenting Thursday, December 5th at 2 p.m. Eastern Time. Have a great rest of your day and happy investing.